Good morning. The got data video for the week beginning the 3rd of March 2025. These weeks are going by very fast, and we've seen a lot of geopolitical macro as well. So don't forget all the stuff that's going on in the world when you're trading, because you can't just be looking at things in a vacuum, because there's a lot of things that are moving the markets. It's really, really important. So keep an eye on your calendar. So what's good about this COT data report that Christian does for us every week? We've got a thing in there's a tab called the Delta tab, and it tells us the change over time, and we can see the difference of what's happening. So that obviously on the week prior, we've added 1% on gold. They've gone a little bit more bearish on the Swiss. They've added longs on the yen. They've remained the same on the CAD. They've gone a little bit long on the pound, and they've gone a little bit long on the euro. Stayed the same on the Kiwi, and they've added a little bit long on the Aussie, and they've actually reduced their exposure to dollar by 1%. So that's quite useful. And don't forget, you've got all this stuff here as well. We can look at like permutations, and we can look at trade signals. So according to this, the Aussie USD, it may be okay. And what we're seeing in price action is that we saw a big dump in order for the banks to get in. That's a potential scenario. And you may have seen that big dump on the Bitcoin. BlackRock announced an ETF on Bitcoin. So they wanted price nice and low for them to come in and swap the market and flood it with buy orders. And Bitcoin really rallied. And so what happened is that the market makers pushed the price down as far as they wanted it to. It really fell and looked really scary, and they got in. So it may have been the same scenario with the cross dollar with the Aussie. Potentially, you've got to be careful, and they want price low in order to buy. And then if they're going to sell it, they want price nice and high. So we may be seeing a crossover start to materialize on the gold. We're seeing that diverge a little bit. So yeah, there's lots of useful, juicy stuff. Let's have a look at the chart page, and we're going to create this new one. See, euro has ticked higher as well. We may be getting a crossover on the euro. Let's new chart. We'll call it a net non-coms. The net non-coms are your banks and institutions. They're the big fish. So the euro has ticked higher, and the dollar has just reduced ever so slightly. It's a tiny, tiny reduction, but you can see the euro has pumped quite a bit. It might be the situation, like I explained just now, about getting price low in order to get a good order in. And this looks like it might be setting up for a euro USD long if we get the crossover. So be careful, and don't forget that thing I put in Discord. Statistically speaking, if we have a weak February, which we did on the S&P, March and April tends to favour well over the course of the last few decades. So if we have a weak February, the following month we actually perform well. So it might be that we're going to risk-on scenario evolve, and where the dollar's potentially going to weaken, which it has ever so slightly, and we may see risk assets pump. So it's possible we're going to get a buy on this. Let's take, actually keep them on, but put the yen on, and the yen's going to be of note. Wow, okay. Oh my gosh. 60,000 to 95,000. That is bonkers. We've really come off that low. The yen is strong now, okay? So be careful with that. So we should see yen actually perform quite well this week coming. So if it's going to be interesting, if we're going to be a risk-on scenario, we're going to have a strong yen. So it may be that we're going to decouple from that correlation, where the dollar is going to be the true safe haven, potentially. But that's really interesting. That's the highest we've seen it since we looked at the COT data, and that's a bit we've been looking at for years and years, and we'll crack that high, and we're still pumping. So we'll keep yen on. We'll take euro off, put on Aussie. Aussie is ticking higher as well. And likewise, it could be setting up for AU signal. If we get that to continue to pump and the dollar falls slightly, we're going to get the buy set up on Australian dollar, US dollar. So that's ticked up higher. Pound on. Pound's ticked up higher. We're in positive territory now, 4,000. So that's good. Don't forget we held that support, multiple supports you could argue actually, and we held it. We didn't break it, so we're back positive. So could be good for pound longs. And I think what's happened is that price had come down into like a discount area on a lot of currency pairs, and in order for them to get involved and then in order for them to buy, it's probably what's actually happened. CAD's up higher as well, so everything is going up higher apart from the USD. Minus 160, which is really heavy, to minus 137. Still weak, obviously. We're still miles below zero, but we have come off that low. CAD off, gold on. Now, gold's going to be of note. I was wondering whether or not we probably a little bit too extreme, maybe. And it's probably worth noting the gold bubble. So come and check your sentiment. You don't have to use the QDB sheet. You can use any sentiment source. Look at FX, SSI, look at my FX book, look at FXCM, look at Oanda, look at their positioning. IG, they're now net long on gold at IG, and they're 56% long. So the herd have flipped on their majority. So it might be the case that retail sentiment could be driving this now. And we had this head and shoulders pattern, and we were unable to break above. We had a neckline break, tried to break above, but it's like, no, not going to do it. So yeah, keep an eye on your retail sentiment. The sheet is invaluable. It's really, really good. And it's even got future predictive qualities in it as well, which is, I think, it's unknown to anyone else. The fact that we can have a what if scenario, if they hold on to a particular bias, where is the sentiment going to be? We've got the gold bubble, but the future bubble. So we can predict the future on the sheet, which is pretty amazing. So keep an eye on that. As like I say, the retail sentiment will be your guide on that. I think that because the COT data is delayed from Tuesday. Gold off. Yeah, you could look at peso, but it hasn't done anything. Mexican peso is up as well. So there's the dollar peso trade setup, where we'd look to short the USD and long the peso. But whether or not you want to get involved in that particular currency pair, if you've never traded before, just watch it. Peso off, Kiwi on. And, okay, so one thing that isn't ticking higher is the New Zealand dollar. 9.53, and we come off 47, so some weakness in the New Zealand dollar. And that's it, Swiss franc. And we're just sideways. So what's going to happen is that I think, because Zelensky is still in the USA, I think he wants to go back to the White House to sign this deal. I think what will probably happen is that temperatures will calm, and emotions will settle, and then there could be a signature on that paper, and it'll be a first step towards peace, and then we'll be risk on. We'll have a big risk relief rally on Monday. However, if he doesn't sign the paper and he goes back home, it's going to be quite bad for risk appetite, because it'll just mean that Ukraine won't be getting the support from the USA, and it's going to have to rely on its European neighbours. The European allies will have to fork up the defence budget, and that's going to be bad for the Eurozone, and it's going to be positive for the dollar, and it's going to be bad for the euro. And so it's got all these consequences and these permutations about the signing of this particular paper. So I think what will probably happen, he'll be urged to sign it from the European leaders, because they don't want to fork out and increase, their spending when it can be avoided. And so I think what will happen is that he'll sign it, and then we'll have peace, and then we'll be risk on. And also, lastly, before I wrap up the video, is that the herd had gone long on the S&P, but they started to short it heavily when the word World War III was announced and it was repeated on news media. They'd really sold it, and that really woke the bears up, and they may even hold on that bias as well. If they hold short, we'll rally on the S&P. So there's the COT data video. Hopefully it helps. If you want to join us, you're more than welcome. And don't forget, this particular file is for basic members only at patreon.com. But if you want to support, we've got entry levels at $5 a month, and you get access to the videos. And you can also be supporting me as well in this project. So I wish you a good weekend, and I'll speak to you guys soon.